What's going on, traders? It's Troy and I from the Intraday Investors here, and today we're going to talk about the current situation in the markets and one of Troy's trades on Boeing he took last week. We're going to go over Dow Jones Industrial, S&P 500, and we're going to go over Boeing. Just give you guys our thoughts on the current situation in the markets and how you guys can be better traders from what's going on today.
Right. So it's really about adapting to certain market conditions because as you can see from 2008, we were on an 11-year bull run. Okay. 11-year bull run. So like at some point, like this has got to
Gotta go down.
yeah, like this is insane. So as you can see right now, we have our technical analysis on the Dow Jones. We're looking at it in what is this?
Max chart.
Yeah, the max available.
As of right now, just with the economic situation, we were just at all-time highs in February, and then this virus came from China, and well, who knows where it came from, but it started in China, and then it's in the U.S. now, and we've got some crazy market situations going on. Volatility is extremely high, and it's really hard to trade in this market right now. When the VIX is at 50, 60, 70, we can really see an increase in moves within stocks, and it doesn't matter which way it is. But can
you want to explain to them what the VIX is?
Yeah, so the VIX is a volatility indicator for the stock market. So when we're watching the VIX, if volatility is high, normally that means that maybe option prices and spreads get wider. It's more difficult to trade a market, or we like high volatility though because it makes for good moves. So maybe there's some pros and cons to having a volatile market, and there's a lot of pros and cons to having a very slow market, like where we were just a couple months ago last summer.
Right. So as you can see, we're looking at the Dow Jones, and we have this technical level that we've drew. Okay, and you can see it pretty much bounced right at it. So I'm pretty happy with that. If we go back, this was a couple weeks ago, and I actually drew this. Oh, you can see right here. This is where we're at. Okay. And it actually bounced at that level that I've identified. I was pretty happy with it. My first entry on because I wanted to start my long-term account during the sell-off and really take advantage of this crisis. And my first entry was with 2,900 into just diversified ETFs. We can get into that further. But my first entry was right here, so I didn't get the best fill. I got in a little bit too early. And I was planning on buying my second entry right around this dotted line that I've identified because you can see the highs. I was planning on entering my second position right at around this dotted line with 3,000. You can look at the 2001 high and the 2008 high. We bring that dotted line. That's about the area that I wanted to. You can see that if we go back here, that's exactly where it bounced. Okay, right now we're trading at around 2,200. Okay, but like honestly, I think we might test new lows. Like, what are your thought process on
Potentially,
that?
yeah. We were looking at charts from farther back, and we had a bounce initially from the lows, and then we would trade lower. So that is something that could happen. Like I said, we're not entirely sure about what can happen because we've had times where, like just last week, a couple of us, we put money down to short the market on SPY puts because the unemployment data was going to come out, and we were expecting the unemployment to be really, really bad, maybe like 15, 20%. So came out that unemployment was double what it expected, but the market ripped 7%. So it's really, really hard to get a grip of where the market could be going right now. So it's why you cannot form a specific bias in a volatile market like this because it's so choppy and it goes all the time.
Right. And as you can see, now we're looking at the SPY in a 20-day 1-hour analysis. Okay. You can see we had highs of $313. Is that right? $313? That's a 20-day analysis.
20 days, yeah, but that's not the all-time high. 20 days ago we were at 313.
No way.
Yeah.
It feels like this March has been so long.
Yeah. Low 217.
Okay, and you can see that we had highs of 313 in this 20-day analysis and lows of 217. Okay, as you can see, we tested that low. Okay, we tested that low, and I truly believe we're in a bull market trap. As you can see, this is where you shorted it right around here, correct?
Yep.
Okay, that's when the unemployment data came out the following morning. So
we did rip the next morning.
Yeah, ripped the next morning. You can see, and then we hit highs around 265. And I actually took off some of my long term from my early entry at about here because I had a feeling that it was a bull market trap. So I wanted to get some more available cash to trade.
Mhm.
So I can, when we do test those new lows, that I can get a better entry.
Yeah.
Even though, I mean, I cut my losses at $15-30. It's not a big deal.
Exactly.
I just want to, get a better entry.
Yeah, so we're not telling you to just buy all the stocks now, but at the same time, we're at a spot right now where it's a good time to maybe start a portfolio
Right.
and hold the longer term. Because if you go look at that Dow Jones chart or look at that longer term chart, every time we've made these ridiculously low trends,
Right.
we always go back up.
We always
so you can
recover.
always be assured that the stock market always returns to new highs, and that's proven by historical data.
Yep, exactly. And you can see, like, in 1987, it dropped 41%, and it took a year and a half to recover. So
Exactly.
a year and a half to recover, and then 9/11. I mean, we have some consolidation through, was it 99 and 2000?
Yep.
And then eventually sells off about 31%. Again, it recovers in about 2 years. And then 2008. 2008 was a little bit longer of a recovery. It was 5 years, and it dipped about 54% over the course of 2 years or a year and a half. So yeah, that's insane. And now we're into an 11-year bull run. So this is actually absolutely insane. We were definitely in a bubble, and this coronavirus crisis that's going around was just just
the
needle to pop the bubble. And it looks like we have a huge sell-off right now. You can see these volume, like, look at these volume bars. And any other data, do you see a bar? I mean, besides the 1987,
Yeah.
correct? Like, that's insane.
So the reason we're seeing so much volume is now we're so much far advanced with technology. More people are trading. More people are involved in the stock market.
So I feel like it will
moves can
recover.
be more violent.
Right. So I feel like it's just as fast as we went down. I think we can recover just as fast because everyone has access. There's so many retail traders. People are trading off their phones. All this technology and the media outlets. I feel like one good news, like we're making like 2,000-point moves at Jones.
Yeah.
Like, it's insane. So anything else you want to add to this?
We can look at your Boeing trade.
Okay, we can. Yeah. Okay, so let's delete this right here. Yeah, I was pretty happy with this trade. Boeing's been trending. I mean, it hit lows of 98. I actually entered for a long position. So this is what I mean. Like, I started my long-term account with Boeing because it dipped to like $89, and this it typically trades between 300 to 400. So I got
70% drop.
Right, that's a 70% drop. That's
insane. 70% on a $400 stock. You can say that eventually it will recover, but like if you're down from 400 to 90, and they are getting bailed out by the government, so at that point, like if it's at $90, they're getting a bailout. They're going to stay in business. You can only imagine it's going to go higher eventually. So that $90 range to $100 is a great buy.
Right, and I got in at 98, which I was pretty happy about. So that's my long position on it, but I did actually short it. But so like I'm holding it long term, but then I'll scalp it intraday. That's just my trading strategy. We all are unique in our own ways, but we can go over it. So Boeing, we're looking at it in a 3-day analysis. Okay, so this was Wednesday. When was Wednesday? March 25th, and then March 26th, and then March 27th. It's just smaller because we're only going to go over the morning because I was in and out. It was a quick trade. So, and this is one of my favorite setups too. So you can see Wednesday, it failed to break above that 173 level. I didn't actually trade it that day. I wasn't really watching it. I seen it when it started to consolidate the following day on Thursday. It was failing to break that 173 level. You can see it started to sell off, and then eventually broke the EMA and the VWAP after consolidation break, and then again it set new highs at 186. Okay, that was when it made it 70. What was it? It was at $89, and in a couple days
186.
That's my only regret is not buying it more shares of that. But you can see that it broke the resistance right here, and when the resistance is broken, it becomes a support. This is just basic technical analysis. Okay, you can see the pre-market level on Friday morning. It tests that support that I've identified based off previous trends and bounces on it. And this is when I actually had it on my watch list because it was making super moves. And depending on which direction the market was headed, I was planning on either going long or short. So you can see that we clearly broke the support.
Break the support. Then we get a retest. So previous support becomes resistance.
Yep.
So we drop, and then we get a retest of that level, and then we go further down. So
right.
that can make for a great trade if you're trading pre-market shares too.
Right, and it went from like 172 to all the way to 156. So this is a huge move in a short period of time. Even if you're not even trading options, even if you're just buying equity, that's like what a $25 move, right? So yeah, my entry was the second. I entered one contract after the break of the first 5 minute candle. We both never really like to trade on the first 5 minute candle just because the spreads on the options are kind of
And
wacky.
because there's no data, you know.
Right.
If we're looking at one candle, what kind of data is there for us to say, hey, we can enter, we
Right.
can make a trade just based on one candle? There's no data.
Right. Right. Exactly. And you can see that we had a really clean break, so that's why I entered my one contract. My only regret is I got out super early. I mean, I watched the contract go from $3.60 all the way to $8.45 in a matter of 7 minutes, and I definitely scalped that. I was out in like a minute and a half. I definitely could have capitalized way more on this opportunity. You can see that it bounced at 156. We have the support from over here, previous trends. So yeah, there's always a reason for everything. You never come in with a blindfold on. You have to know your entry, your exit, and where you're going to cut your losses if the trade goes against you. So you can see it started to wick against me. This is like the risk. This is the scary part in the options because you can have a play that you've identified, but can you see that where it started to wick against me, man?
Yeah.
Like,
But at the same time,
Right here.
you know, you have your stop loss, but you have to understand when you're going to enter that trade, you have to understand the risk. So you're putting on $360
Yeah.
worth of buying power. You got to understand that maybe you're risking 5-10% of that contract to make a good trade on it. So before you enter that trade, you got to understand, okay, look, I'm putting on this buying power. This is going to be my risk. This is where I'm going to get out of the trade if it fails against me. This is where I'm going to take profits.
right.
So before you get in, you got to have these kind of levels and identifying them, which you did a good job on from that from the previous.
And you always have to understand that there's some form of risk every position you
Right.
take.
Yeah.
So like, don't expect that you're gonna have a green day every day. You know what I mean?
Because you're not.
You're not. As long as you can manage your losses pretty tightly, then that's how you're gonna last long term in this game, realistically.
That's true. Cutting your losses and making your winners run, which is
Right.
the easiest thing you can say, but in hindsight, it's the easiest thing you can do, but it comes to be very
Right.
difficult.
And same thing with my trade earlier in this week on SQ Square. It's actually been trending a lot. I really do like the fundamentals on this company. I did add it to my long-term portfolio, but same concept is on Boeing. You can see the day before it failed to break this level at $58. Okay, and then the following day it fails to break it. I never really entered right here. I was understanding that this is a resistance, so this is a potential place where I want to sell unless it breaks a resistance with a lot of volume. This is actually a perfect example because I don't want it to get rejected and then me get in early
Exactly.
before the resistance break because that's deadly in this game.
Yeah.
But
And if you get in on that wick early, and then you get hit with that red candle, that's a $2 move against you.
Right
so
here,
that could
this one
result in a
here?
pretty big loss. No, the candle before it breaks down.
Oh, okay, right here.
Yep.
But same concept, just on the long side. So I like to never on the first 5 minute. You can see the second 5 minute candle broke right here. That's when I entered. It broke the VWAP and the EMA. We're doing about 1 million in volume. Yeah, so that was a nice trade. I ended up selling at this resistance. It broke it a little bit, but it got rejected. Ended up selling off and bouncing on the VWAP. So you can see.
Yep. And as you can see, like what he was saying when he entered, the second candle there has more volume than the first. So as it's breaking out, there's an increase in volume, which is what we're looking for when we're doing
Right.
breakout trades.
Exactly. And we don't really make new lows, and you can see the bodies were showing higher lows
Yep.
and higher highs.
Mm-hmm.
So I was able to enter another contract at the break of the VWAP, and then I never actually sold at this resistance because you can see the volume, like he was just saying.
Volume is increasing on the breakout.
Right, so I didn't want to I knew that the volume was there, that this was a potential huge momentum trade, so I didn't want to get out too early, but yeah, I ended up just scalping it in and out again. So yeah, that was my trade on SQ. Anything else you want to add? So realistically, our thoughts on this coronavirus, I think we're gonna test new lows for sure. You know what I mean? Just to
Yeah.
conclude on this video, what are your true thought process behind? How do you think next week's gonna play out?
You want to just enter a new week with no bias at all. Just trade price action. News is one thing. If there's news catalyst, you could trade the news catalyst, but you just gotta trade price action. You gotta trade what the market's doing and what the market's gonna give you. If you go in with a massive opinion and the only thing you want to do is short a market and it's going up, you're gonna lose a lot of money. So, and that's exactly what I did last week. I was just trying to short SPY after all this unemployment data, but it just did the opposite of what I thought it was gonna do. I was so opinionated on the stock.
I think the stimulus package definitely had a huge impact on the market ripping. I think we're actually in a bull market trap. I can see this whole week, upcoming week, being straight blood, which I don't really mind because I'm going to buy the dip. Maybe short some opportunities if we make some big moves on the downside. Yeah, just take what the market gives me.
I think that this week for me, I might start out the day. I might not even trade on my live account. I might trade on my paper account just to get a feel for how the market's doing.
Right.
Because if the volatility is going to be crazy again, there's no way I'm going to be able to take advantage of it just because of how crazy the spreads are, especially with options right now. It's really, really difficult to trade in this market.
And I respect it a lot that you're going to go paper trade just to because you can't beat the market every time. Like you can't. Confidence is one thing, but it's another thing.
And if you can go back to your fundamentals, say go back to paper trading, you can adapt more to how the market's doing, and then you can take advantage of it that way.
Exactly.
Because that's what it is. If you're going to play the long-term game in the stock market, you got to have to adapt to different conditions.
Right.
Like the market was completely different last year when I was trading, and it's a completely different market now. So the ability to be able to change your trading situations and your trades are
right. You have to constantly be adapting and evolving in this game. Doing your research, always trying to become a better trader, getting a good night's sleep, and waking up at a reasonable time, and just really mental clarity.
Yep.
All right, so that's about it for our video. Hope you guys enjoyed.
Yep. If you guys want to see more videos on the current situation with the coronavirus and how the stock market's doing, just leave this video a like.
All right, guys, have a good one.